We know the system is designed for the rich. It's not designed in favor for the poor to ever get ahead. Right now, we know that Wall Street giants, sovereign wealth funds, and corporate treasuries, they're all buying as much Bitcoin and Ethereum as they possibly can, and at the expense of the little guy, of retail, as they're called. So hopefully, despite the turbulence in the market, you are not selling. Because if you are selling, you're literally handing the future of your wealth, of your family, you're handing it over to them, to the rich. They see these corrections as a sale. Like Bitcoin and Ethereum are on sale. That's how they say it. So if we take a look at the crypto market and what's been happening, we would see that Ethereum's pullbacks, okay, its corrections keep getting shallower, meaning they're not as dramatic and as big of dumps or corrections as they were before. In June, the correction or the dip dropped 27%. In July, just 15, so you see a little less. And in August, just recently, 8%. Buyers are stepping in quicker each time too. And on top of all of that, Ethereum just closed its best quarter in history. And Bitcoin's structure is lining up with history as well, or the historical pattern. And past bull cycles, 2011, 2013, 2017, and 2021, the sixth month has always been a pivotal moment that has set the stage for the next run up. And now here in 2025, we've reached that same moment again. So let's talk about wealth transfers and how they exactly happen and unfold. So stay with me, because as we continue to go through this data in today's video, you'll see the full picture and you'll know why this cycle could become their turning point in your story and your finances. Happy Monday, by the way, and let's get started. So kicking things off, let's talk about Ethereum's squeeze. What is happening right now on Wall Street? Because right now, Ethereum is very much so at the heart and the center stone in the debate between Wall Street and hedge funds. We are seeing a real power struggle take place. Hedge funds are shorting Ethereum heavily, while Wall Street giants and new Ethereum treasury companies are scooping up. They're buying as much Ethereum as they possibly can at record speed. In just the last 36 days, for instance, Tom Lee's Bitmine has accumulated over $5 billion worth of Ethereum. And just this past week, they added another 470 million, bringing their holdings to more than 1.3 million ETH, about 1% of the entire circulating supply. And it's not just Bitmine either. BlackRock has been buying ETH 15 times faster than Ethereum. So together with Ethereum treasuries, these groups already control more than 6% of Ethereum. And now they're pushing towards 20%. That is incredible. So this means Wall Street-backed institutions, billionaires like Stan Druckenmiller and Peter Thiel, and investment legends like Cathie Wood and Ken Griffin are all aligning behind Ethereum. They all believe in it as the future of finance. And as they line up to support it, they're putting their money where their mouth is, and this equals more liquidity, okay, more dry powder into crypto, more than has ever been seen before. And on the other side of this trade, okay, or this action we see in the market, are hedge funds. And they are dumping cheap ETH into the market only to watch it get absorbed by players with deeper pockets and longer time horizons, those who are willing to wait and go through the corrections to see it go up because they know it's gonna go up. The last time we saw a setup like this, it was in the silver markets of the 2000s, when a short squeeze nearly brought down JP Morgan. And the difference today is simply that Ethereum trades on open crypto exchanges with no circuit breakers and no easy off switch. So this is why analysts are calling it the perfect setup. If the squeeze plays out, Ethereum could be looking at the kind of exponential move Bitcoin had in the 2017s. That could be 100 times, okay, 100 multiple run. But even a portion of that could mark an incredible move for Ethereum. So now let's shift gears a little bit and let's talk about what's going on with Bitcoin. Because Bitcoin is very much so in an arms race right now. We see corporations, sovereign funds, and even political organizations are all obsessed with Bitcoin and loading up on Bitcoin at an unprecedented scale. Take, for instance, Japan's Metaplanet. It just added 775 Bitcoin for $93 million, bringing now its holdings to almost 19,000 Bitcoin, worth more than $2 billion equivalent. And in Europe, the AMDAX rolled out one of the boldest strategies yet, planning to acquire 210,000 Bitcoin. That's the equivalent of 1% of the entire supply. And on the sovereign front, okay, talking about nations, South Korea's National Pension Fund boosted its Bitcoin exposure by 182% in the first half of the year. And Norway's 1.7 trillion sovereign wealth fund, the world's largest, increased its own holdings by more than 80%, now holding more than 11,000 Bitcoin. Even in the US, we see President Trump's World Liberty Financial Fund, although I think it's mainly run by his family. The point is, it doesn't matter. They are quietly adding to their pile as well, with a recent $10 million Bitcoin purchase. However, all of this put aside, the biggest headline comes from Strategy, Michael Saylor's company. Today, they're holding around 629,376 Bitcoin, bought for about $46.15 billion at an average of around $73,320 each. That position has already returned 25.1% for them this year alone. And they're still adding more. Of course they are, as should we. Just this week, for instance, they added another 430 Bitcoin for about $51.4 million at an average price of nearly $119,666. So if you thought current prices were too expensive for you, take a page from their playbook, because they don't care. They're buying at the price that it is now, because is it going to matter when in 5-10 years from now, Bitcoin is worth over $1 million? I don't think so. So that's how you think like a long-term rich family type of investor, because financial education definitely is passed down from generation to generation. You would know that if you didn't grow up in a rich family, or if you did, like it's literally not taught in schools. This is very, very lucrative information, that which I share on my channel, if I could say so myself. A lot of it I had to learn the hard way, and then a lot of it I learned from people who know more than me, by paying attention and learning from their lessons, so I didn't have to do them myself. So anyway, just a quick word on Bitcoin's price and where it's going, and the fact that right now is still a discount. Anyway, back to today's content. Right now, we see long-term holders are compressing supply even more. Accumulator addresses, which are basically just wallets that only buy and never sell, have hit an all-time high of over 308,000. Bitcoin. And historically, tracking wallets that don't sell has been the most powerful bullish signal in telling us where we are right now in the tides of the market and crypto. Bitcoin is no longer a speculative side bet. It's fast becoming the standard for corporate treasuries and sovereign reserves. With these kinds of players now loading up, okay, those that know what's happening and they know what's valuable, we can only assume and infer that we are only at the beginning of this adoption wave. So if you're here, seriously, congratulations to you. So now let's talk about what's going on in the macro environment of things, because we know that the big picture is setting up exactly why crypto looks so strong right now. Inflation is heating back up. Trump's new tariffs are pushing prices higher everywhere for everyone. Import costs just had their fastest jump this year. No surprise. And wholesale prices are at a 3-year high. For instance, vegetables alone jumped 40% in a single month. So with this kind of pressure brewing, it gets harder for the Fed to deliver the rate cuts everyone is hoping and counting on. And that almost guarantees, okay, more volatility ahead. And I'm just letting you know, because it's just like the weather, right? Before you head out on a trip, you want to know what the weather's going to be like, so you know how to dress, how to prepare, what path, what road to take. So if we see volatility coming, I just want to let you know, so you don't get freaked out. And instead, you do like the rich people do, and they just buy more because they know where it's going in the long run. Anyway, even with all of this backdrop, JP Morgan still expects the Fed Reserve to cut rates 4 times this year, starting as early as in September, bringing the benchmark down to around 3.25 to 3.5%. And Wall Street is bracing for a full easing cycle too. And every time we've seen this kind of pivot, risk assets like Bitcoin and Ethereum have exploded higher. Then we have to layer in what's going on in geopolitics. Trump just said there's big progress on Russia. His push to get Putin and Zelensky on the table adds another kind of layer of uncertainty that markets are glued to. They're just waiting to see what happens. And we see that on the liquidity forefront of things, we can expect a wave of liquidity coming into the crypto market as well, because we see that China dropped $98 billion into the system just this last week. And the global money supply is up almost 4% in 3 months. And we know what history has shown us time after time, which is when liquidity rises, Bitcoin is not far behind. Bitcoin also rises. Even the ETFs keep pulling in more cash. Last week alone, Bitcoin added more than $500 million in inflows, which demonstrates steady institutional buying week after week. So if we put all of this together, we have rising inflation over here, looming rate cuts, geopolitical headlines between Russia, Trump, Zelensky, and we also see fresh liquidity pouring into the world, into the M2 money supply. So this is the perfect storm setup, and crypto is sitting right in the middle of it. So maybe it hasn't happened just yet, and maybe you're getting impatient, to which I would say don't. To which I would say just take a step back, take a deep breath, and don't freak out, okay? It's not going to happen like at a snap of a finger, or at the same time it could, because that's how fast the crypto market turns, all right? And I'm going to continue to come every day, Monday through Friday, to bring you this news, because I need you to know what's happening so you can be ready. And don't get tired of hearing the news, because you have to know what's going on too for yourself. So I know recent pullbacks might feel very uncomfortable. They might shake you to your core and make you wonder what you're doing or how much longer this is going to happen. But this is exactly when you find out who you are, what you're made of, and what you're doing and why. The rule is very, very simple. You have to buy when you see and you sense fear in the air, and you have to sell when you see that the market is greedy. When you see everyone talking about token pump and meme coins and everyone's becoming rich, that's when you want to start paying yourself, okay? So it's counterintuitive. You have to do the opposite of what you see people doing. And right now, the most important signal, okay, in terms of technical analysis, just triggered. Bitcoin dominance printed a bearish MACD cross. For anyone not familiar, that's a momentum indicator traders watch. And when the short-term trend drops below the long-term trend, it's often a sign that money is starting to rotate out of Bitcoin and into other assets. The last time we saw this happen was in August of 2020. And what followed after was unforgettable. It made so many millionaires. Altcoins basically ran vertical straight up for 4 months straight. And large caps, they went up like 10 times, while mid and low caps pulled off up to 20 to 50 times. Wild. And right now, we see that the ETH BTC chart still has room to climb before hitting major resistance, okay? It's currently sitting at levels we last saw during the 2021 bull run. ETH dominance is currently just above 13%, and analysts see potential for it to rise towards the 18-20% range, the same zone that marked Ethereum's explosive move in the last cycle. The gap shows just how much fuel is left in the rotation for Bitcoin into Ethereum. So that's the setup for Ethereum. And on the usage side, Solana has been proving itself week after week. For 22 straight weeks, it has led every layer 1 and layer 2 blockchain in network revenue, generating over 20 million last week alone. The network also hit a stress test milestone of more than 100,000 transactions per second, showing developers what's possible at scale. So when you add all of this up, Bitcoin dominance rolling over, Ethereum gaining strength, and Solana holding the lead in usage and performance, it's the classic setup. Altcoins are still lagging, but every chart says that this phase will not last longer or much longer. because we see that Bitcoin just flipped 7 years of resistance into solid support. Its 200-day moving average has also crossed above the $100,000 mark for the first time ever in history, which is a signal that usually marks the start of a new era. And Ethereum is showing a similar setup. The ETH chart is tracking almost exactly where Bitcoin was in 2020. Consolidation, breakout, disbelief, and after that stage, Bitcoin tripled. So Ethereum has the same room to do the same, and it's following the same pattern. The bigger market tells us a story too. The total crypto market cap has already pushed into the discovery zone as long as it stays above the 2024 highs around $3.7 trillion. But altcoins as a group in itself are still lagging behind. If the altcoin market cap simply revisits its previous all-time high, that's a 2-time multiple, okay, from here. And here's another key point. Not a single one of the 30 bull market peak indicators tracked by CoinGlass has gone off yet. 0 out of 30. So by every historical marker, this cycle has plenty of room left. And at the same time, retail, or the 99%, their interest is starting to wake up again, with global searches for crypto at a 4-year high and Ethereum search trends spiking to yearly highs. But the irony is that big money hasn't even fully arrived yet. Bank of America's survey of global fund managers shows the majority still hold 0 crypto exposure. Meanwhile, equity markets are showing what happens when institutions and retail start buying together. Last week, total ETF and stock purchases in the US hit almost $6 billion, more than double the 52-week average. Institutions drove nearly $4 billion of that surge. Corporations added $1.6 billion in buybacks. And individual investors have now been net buyers in 33 of the past 35 weeks. Sentiment is strong right now, and crypto is lining up to be the next beneficiary. This market is still building energy with plenty of upside left ahead. So as I was saying in my intro, we are literally watching the biggest transfer of wealth ever in history right now. This is how every single bull run works. There's pullbacks, it tests your conviction, and strong hands, okay? Big, smart, wealthy investors, they use these moments to buy more. So this is what we need to do too. So do not get shaken out. This is not a time to be scared and go sell everything and run away and run home, okay? Run to your mom. Don't do that. Anyway, guys, that's a wrap for today's video. I love you guys very much. Happy Monday once again. And if you want to know 2 of the projects I'm watching closely right now, and I'm going to get into a lot more coming up here soon, as well as a lot of investor mentality and lessons that I think you should know before we enter into this bull market full throttle. So those are coming soon. Stay tuned. But if you want to check out these 2 projects that I'm bullish on, check out that video here. So, okay, guys, I love you. Share this video with somebody who needs to see it, and I will catch you guys in my video tomorrow. Oh yeah, please like the video.